Yield, again, down from last year's record high. A little bit below trend, but still the 5th highest yield on record. So still a very good corn yield this year. This next map that I have for you just highlights the current. We're not moving anymore. I think we're probably frozen, so you may want to follow along with the slides there. We'll see if we can get that caught up. But this map highlights the current corn yield forecast by state. That's what the top number is. The lower number in each state represents the percent change on this map from last month's forecast. Any states colored in any shade of blue are increasing from last month. Any shade of red are decreasing. And of course, the deeper the color, the larger the change. You don't see many deep colors on this map because the changes from last month all pretty minor, as we would normally expect this time of year. I would point out that anytime you see a pound sign next to a number, it indicates that that is a record high. And we do see record high yields this season in California, Illinois, Virginia, Washington, and Wisconsin. If you flip the page, you can see this next map again showing the current yield forecast by state, but here we're comparing to last year. Same rules apply. It's a percent change from last year. You do see a lot more deep colors here. In fact, a lot of deep red, as we see some pretty large decreases, especially through the central part of the country here. Again, the dry conditions this season really having an impact through that part of the country. You can see the declines there. Big increase in North Dakota. That's really a recovery from problems last year, but otherwise you can see what's happening across the country compared to last year. The next slide just highlights again that information, some of that information that we modeled from the remote sensing information here. It's always interesting to look at because it shows you kind of what's happening across the country with the yields. The deeper the green, or if you get into any of the bluish tint, that's going to be your higher yields. Of course, the brownish tones represent the lower yields, and much as I just showed you on the map previously, you can see the dry conditions to the west leading to some of those lower yields. And probably the brightest spot of the country, central Illinois. If you look closely, you can really see that deep color, fantastic yields in that part of the country, leading to the record high forecast this year. Next slide I have for you highlights some information from the Corn Objective Yield Survey. This first chart shows you the percent of those samples that were processed in the lab this month. So we actually have weighed the ears in the lab. So we've got great information there. 94% of those samples processed through the lab this month. You can see that's the same percentage as last year. So that's about what we would expect to see in November. This next graphic, again, it's some other information from objective yield. What you see here, each of those vertical bars represents the number of ears per acre as measured by the survey. The red dots represent the current yield forecast for that 10-state region. And so what you can see on this graphic is 28,450 ears per acre, down a bit from what we saw last year, still the 6th highest ear count on record. And the relationship of the red dot to that ears kind of gives you a bit of a pseudo representation of what's happening with the ear weight. Next, we just have a quick chart here to kind of show you how the 13.9 billion bushel forecast compares over the recent seasons. That does represent the 7th highest corn production on record. Next, we'll take a look at that current corn production forecast and how it compares with the published expectations. The way this graphic is laid out, each of those blue dots represents an individual industry member's published expectation of the corn production forecast. The red block is the NASS forecast. You can see for November, up toward the top end of most of those expectations, but certainly falling within the range of expectations this month. Next, we'll move on to soybeans. Similar set of graphics to show you here. So we'll start things off talking a little bit about soybean harvest progress. Here you can see as of November the 6th, 94% of the soybean crop was harvested. That compares to 86% for both the 5-year average and last year. Again, like we talked about with corn, most of the season a bit slow in terms of development, but harvest has really taken off. And you can see we're actually ahead of all the previous 5 years. So progress. So looking at the forecast, again, no change in planted or harvested area from our previous forecast, but our yield forecast now 50.2 bushels per acre. That's up 0.8% or just 0.4 of a bushel from last month's forecast, still down from last year. So our production forecast now 4.35 billion bushels, 0.8% above last month's forecast, but still 2.7% below what was produced last year. Taking a quick look at the yields over time, again, like we talked about with corn, despite being down a bit from last year, it's slightly below trend. It's still the 5th highest soybean yield on record this year. This next map, similar to what I showed you for corn, highlighting the current soybean yield forecast by state and how they compare with last month. Again, the lower numbers, the percent change from last month. Similar to what we talked about with corn, not a lot of deep colors here indicating the changes from last month, fairly minor. And again, the pound signs representing those record high yields in Arkansas, Mississippi, and South Carolina. This next map, again, showing you those same yield forecasts, but here making the comparison back to last year. So again, you can see those lower yields compared to last year across most next, just a quick look at kind of what we see with those soybean yields based on the satellite information that we have. Again, looking for those deeper colors for the larger or higher yields, and the more the brownish tones show you the lower yields. So just giving you a visual kind of what's happening across the country with that yield distribution. Next, some information from the soybean objective yield survey. Here you can see 90% of those samples were processed in the lab this month. Just a little bit behind what we've seen in the recent years, but pretty much pretty close to in line with what we would normally expect to see. And here, looking at the pods per 18 square feet that we measured from the survey, here you can see a bit of an increase this month, but still overall, we're looking at pod counts a bit lower than we've seen in most of the recent years. Yields pretty similar to where we've been, which tells you that we're looking at lower pods. So obviously we're looking at heavier pod weights this season. That's what the survey is telling us this year. Looking at the soybean production forecast and how it compares over the recent years, you can see again down from last year, but still relatively high. I would point out that from a production standpoint, we're also looking at record highs in Illinois, Indiana, Mississippi, New York, and Wisconsin. Next, moving on to the soybean production forecast compared with those published expectations. Here you can see again a little bit higher than many of those expectations, but certainly within the range of what folks were expecting today. Next, move on to cotton. Again, looking first at harvest progress. 62% of the crop harvested as of November 6th. The average was 55% last year, 54%. So continuing that trend of running ahead of what we've seen both last year and over the average time period. No change to the planted and harvested acreage for cotton this month as well. But of course, the big story on cotton this year is the high abandonment. As you can see here, 23% increase in planted area, but a 23% decrease in harvested. And that's driven largely by the dry conditions, particularly in Texas. But anyway, looking at the new forecast for yield, 855 pounds per acre. That's up just 1.5% or 13 pounds per acre from last month and above last year. So 14 million bales expected to be produced this season. That's up 1.6% from last month. But again, with the high abandonment, still down 20% from what was produced last season. If we take a look at the yields for cotton, it's actually the fourth consecutive year below trend, but it is the highest yield we've seen since 2008. So, and in a lot of acres, and your yield actually ends up a little bit better than you might expect considering. Looking at those yields by state and how they compare with last month. You can see Texas and Oklahoma down from what was expected last month, but increases are no change across the rest of the country. Looking at California in particular, they actually have a record high Pima yield this year. It's not a record high for the all cotton, but Pima's a record high. On the flip side of things, Oklahoma, that's their lowest yield since 1996. And again, here, just a comparison with those yields by state to last year. Here's where you can really see what's happening this season with the big decreases in Kansas, Oklahoma, Arkansas, and down through that part of the country. Having a big impact, but because of the acreage shift, the increased yields in the southeast, in particular Georgia, holding that U.S. yield above what we saw last year. So it's not all that common that we see a decrease in Texas and that not happening nationally, but their percent of the acreage this year on a harvested perspective, not as great. So looking at the cotton production over the recent seasons here, you can see that's actually the lowest production since 2015. Looking at how the cotton production forecast compares with the expectations here, you can see it is a bit higher than folks were expecting. Of course, we don't get as many expectations for cotton production, but nonetheless, it appears as though folks were not necessarily expecting an increase this month, but nonetheless, that is what we are reporting. We do have a few other crops included in the report as well. I'll run through those fairly quickly. First, looking at peanuts. No change from last month across the board. Acres, yield, production, all equal to what we forecast last month. Overall production, though, is down 9.3% from the previous season. We're actually looking at the third highest yield on record. That's still the sixth highest production, even though it's down across the board. Potatoes, you can see small adjustments to the acreage there. Planted area up just 0.2%, harvested area up just 0.4% from what we had previously forecast. It is our first yield and production forecast of the season for the crop, though. You can see the 438 hundredweight per acre yield is down just 1.4% from last year. So overall, our production is expected to be off 3.2% from last season. That does represent the lowest production since 1989. And that's driven largely by, again, obviously we're seeing a decrease in acres and yield, but that is the, excuse me, that is record low planted acres. So that's where it all starts. Next, we'll take a look at rice. No change to the acres there from last month, although it is down fairly sharply from last season. You can see our yield forecast there down just 0.7% from last month, below last year as well. So overall, our production down slightly from last month, but 14.3% below last year, despite the fact that we're looking at our sixth highest yield on record. Sorghum production, again, no change to acres from last month. We're now forecasting 43 bushels per acre. That's down 3.6% month over month. Big drop from last year. So big drop in acres and yield overall. You can see the production off 47.4%, but again, dry conditions in the southern plains. The vast majority of the acres are in Kansas and Texas. Both states hit pretty hard by the drought this year. And in Texas, actually record low planted and harvested acres for sorghum this year. So that explains the big drop in production there. Sugar beets, again, no change to acres from last month. Small adjustment on the yield. You can see up just 1% from last month, still down fairly sharply from last year. So overall, our production up 1.2% month over month, but down nearly 9% from last season. And then the last crop that I've got included in the report today would be the sugarcane. Just a very small adjustment up on the harvested area there from last month. No change to the yield, so fairly minor change overall. I would point out Louisiana production is the second highest on record. So we've got worse in Louisiana this season. This next slide just highlights some of the upcoming reports over the next month or so. You can see cattle on feed, cotton ginnings, farm labor, and ag prices all coming out later this month. Of course, on the 1st of December, our monthly care reports will be published. And then on December 9th, we'll be back here again for the next crop production report. Just a couple of quick reminders before I wrap up. Next Tuesday, we'll be hosting all virtual. Forward to answering any questions that folks might have for us on any of our various products here at USDA. And then at 1 o'clock this afternoon, as Joe mentioned, I'll be hosting our monthly stat chat series out on Twitter. So we'll be fielding any questions there that folks might have about any of the information in the report today. So that's the last slide that I have for you. And you want to post questions a little bit later on. So Mark, I will turn the floor over to you.
All right, very good. It's working, it is. All right, good afternoon. So I'll walk you through the WASDE results for November. Just for a little bit of background context here, as you probably know, that November is typically a rather undramatic month for us. We're kind of in between things. Harvest is wrapping up in the U.S., so we're going to incorporate the changes in U.S. production that NAS gave us, that Lance just discussed. Most of those, as you saw, were relatively minor. And then in terms of the global side of things, row crop planting is just getting underway in the Southern Hemisphere. Wheat harvest and winter crop harvest is just beginning. So we're going to focus on that and make some noteworthy changes on a few of those commodities. So let's start out with wheat. A few things here to talk about right off the top in terms of global wheat production. Increased this month by 1 million tons. That would be a new record. Reduced our Argentina production by 2 million tons. We'll talk about that. I have a few slides. It's been dry there. Increased Australia production by 1.5 million tons, and then a few other changes there too. European Union we reduced. That's based on ag ministry data from France in particular, and Kazakhstan increased by 1 million tons. That's based on some government data and data from FAS folks. So focusing on Argentina, this is a story that an issue that's been in the news. It's worth talking about a bit. Just a reminder here of where the main wheat production regions are in Argentina, and where we are in terms of the crop production calendar. Harvest just about to get underway, second half of November. So again, early stages of harvest. And basically, the story has been that it's been dry, and kind of odd, that chart there on the left should be turning up as brown. It looks kind of pinkish to me, but anyway, all to say that's a chart of October precipitation. Been dry in October, and then on the left, on the right, your right hand side, it's some satellite imagery of the vegetative health over the past 2 months. So again, just to kind of drive the point home, it's been dry, and that's been impacting yields. So in terms of the two main production regions, both the main growing regions, that's the region more toward the north. Just a visual here of where precipitation for this year ranks in terms of all the previous years, and we're down near a 30-year low there. Southern BA, similar, very dry, and all of this to say that is impacting yields. Just rainfall trace for this year, 2022, compared to a couple similar analog type years. 2022, it's been dry right from the start. We had a few, we did get some timely rains recently, but overall it's dry, well below average. And we're getting kind of late in the game for even if for any real recovery here. So all this to say, we cut our forecast for Argentina's wheat production down 11% this month, and year over year that would be a 30% decline. So pretty sharp reduction in Argentina's wheat production. Now, Australia, kind of the opposite case here. We'll talk about that too. Also, obviously, Southern Hemisphere, harvest about to get underway. Reminder of where the main wheat production regions are within Australia. Also, we're talking about wheat, but barley and canola, similar, also about harvested and grown in the same areas. And the story in Australia has basically been one of abundant rain. Very good conditions right from the beginning of the season until now. If there is any concern in Australia, it's actually potential for excess rains and implications there, especially in the eastern part of the continent, New South Wales, Victoria, etc. Possibly too much rain. But overall, conditions look very good, and we are forecasting the second largest crop on record in Australia. Again, we raised it this month, and on those good conditions. That's offsetting, much of that decline that we have forecast for Argentina. So in terms of the balance sheet, wheat balance sheet, a few things to talk about here. Again, I mentioned production at a new record. Increased total supplies. Feed use adjusted up a bit this month. That is driven by increases in the EU, where despite the fact their production is down, wheat remains competitively priced relative to other feed grains relative to corn. So feed use up there. Also some increases in South Korea, Philippines, Vietnam, various other countries. So relatively small changes. Trade, expecting higher exports out of Australia. No surprise there, given their large crop. Increases out of Kazakhstan as well. Offset by decreases from Argentina, and kind of throwing us over into the positive territory is an increase in the UK. So largely offsetting trade differences, but the UK helps us to show a positive value there. That's mostly that's the high points of our wheat balance sheet. I'll also just note we didn't make any changes in our Ukraine exports this month, so it's at 11 million tons, same as last month. U.S. balance sheet, again, very small changes to talk about this month. Obviously, no production changes. This month, that crop is, we have all the information we have on that. What can I talk about? Seed use down a bit. That's based on NASS data. Food use up, raised this month. That would be a new record. That's based on the NASS flour milling report, third quarter. Record food use, wheat food use. So that's noteworthy. So that's raising domestic use. Exports unchanged. So we're still looking at the lowest export volume since 71, 72. Very low export forecast there. Some offsetting changes by class. We were up on white wheat exports, down on durum, but nets out to zero. And stocks to use ratio tightening up, and that would be the lowest stocks since 07-08. Supplies. Moving into rice, again, relatively small changes here in terms of global production. Sri Lanka down, just reflecting the ongoing economic turmoil in that country, difficulty acquiring inputs, etc. Pakistan down, flooding in the Sindh region. Seeing the reports on flooding there. So that's showing up in our rice production forecast. And in Vietnam, made a cut there too, based on that's an area change based on a FAS post report. So supply and use, global rice supply and use, made some adjustments for the back year that tightened up the beginning stocks a bit by 1.1 million tons. Mainly those were changes to India's trade and use, so tightening up stocks in India, tightening up beginning stocks globally coming into the new year, and that lower use forecast there as well for this month is also reflecting mainly lower use in India and Pakistan, where production is down as well. Trade down, again, lower exports out of Pakistan, offset to some degree by a little bit of an increase in our forecast for India's exports, and ending stocks tightening up, lower stocks in India, Vietnam, Indonesia. Ending stocks there now forecast at a 5-year low globally. So U.S. balance sheet, again, incorporating the change from NASS this morning in terms of production, tightening up U.S. supplies a bit. Other changes that are kind of noteworthy here, raised our import forecast by 1 million hundredweight. That would be, again, a record level of imports for rice. This is all long grain aromatic rice. And important to note, so those imports coming in, long grain aromatics, don't necessarily compete directly with, much U.S. production, but they get consumed immediately. So that increase in imports by 1 million tons is also reflected in the increased domestic use. They're not being imported to store, they're being imported to consume. Now, on the other hand, exports, we cut by 4 million hundredweight. 3 million of that is long grain, and reflecting lower exports to our 2 largest markets, Mexico and Haiti. Especially in Mexico, we're seeing more competitive exports coming in from other South American suppliers. What else can I tell you? Raised season average market price 50 cents to a new record, $19.90. That's the all rice price. That's driven entirely by an increase in the medium short grain price, particularly California, which we raised $3 a hundredweight. It would be a new record at $36 a hundredweight for medium short. Moving to corn production globally, we'll talk about the U.S. again. That's incorporating the NASS change from this morning. Beyond that, European Union production down a bit. That's harvest results out of Hungary. As you know, they've had the dry year, drought conditions. So relatively small adjustments otherwise. South Africa, that's a reduction in area. Now, reminding you, South Africa, Southern Hemisphere, this is a crop that's just now being planted. So this is basically an early cut to the area forecast. And that's directly from South Africa's Crop Estimates Committee. The balance sheet for corn, we talked about production tightening up a bit. Feed use, small change, a couple offsets there. Lower corn feed use in the EU, higher in Canada, lower in the Philippines. So a lot of offsetting changes there, netting out to almost no change to the balance sheet. Corn exports trade down this month, adjusted lower, mainly reflecting smaller crop in South Africa. Ending stocks down, that's also reflecting tighter stocks in South Africa, Algeria, and a couple other countries. Worth noting here too, we didn't make any changes to our Ukraine corn export forecast. Coarse grains continuing to be forecast at 18 million total coarse grains. U.S. balance sheet, again, incorporating the changes from NASS this morning, fairly small production change there, and didn't make any changes to exports or really any of the other use forecasts. So it distributed across feed and residual and ending stocks. No change to season average market price, and just a small uptick in the stocks to use ratio. Moving to soybeans, again, pretty small changes in the soybean, both of our balance sheets, the global and domestic. Argentina acreage forecast reduced here again. This is a crop that's just being planted, so this is a truly a forecast. This is just based on in-country data from Bolsa and elsewhere. Planting underway in Argentina, so still relatively early. Global soybean balance sheet. I put up the back year here just to kind of set up some of the discussion for the out year, for the current year, just because it's kind of worth noting. We made a noteworthy change on adjustment on China's soybean imports for the back year, raised them by 1.6 million tons, and when you work it through the balance sheet, that is also contributing to the higher beginning carry-in stocks for the current marketing year. But other than changes to the stocks and stocks, both the beginning stocks and kind of carrying through to the ending stocks, not a whole lot of story going on in terms of the rest of the use categories in that balance sheet. Higher ending stocks forecast for this current crop year, mainly held in increases in China and a little bit in the U.S., which we'll talk about as well. Speaking of the U.S., again, here incorporating the mass production change from this morning, mostly goes into ending stocks. So we did make a small change in crush too, based on just an increase in domestic meal disappearance. So increased crush slightly, but again, most of today's production increase is going into ending stocks, and we didn't make any change to our seed management. So globally, production down by 1.6 million bales. Countries to note here: Australia cut our production forecast again. Southern Hemisphere. So this is a crop that's just being planted. You saw in my earlier slides excessive rainfall, especially in the eastern part of the continent. That's causing some planting delays, and it's too much rain potentially. And also, prices have been working against the incentives to plant cotton as well. So various factors contributing to lower expected acreage in Australia. Pakistan production down based on, again, we've pulled that estimate down a few months now based on the extensive flooding in Pakistan. The other notable change in terms of global cotton production is in the African Frank zone. And there the issue has been just poor weather generally, too much rain, insect infestations, and impacting yields. And basically, here's just some historic perspective of our historic yields in the African Frank zone. Relatively large cut this month based on just some credible reports coming out of that region in terms of likely impacts of poor yields. Again, that crop not quite yet being harvested, but on the way. So global cotton balance sheet. What can I tell you here? So we talked about production tightening up a bit this month. Consumption we cut as well, consumption down, and this is reflecting this continued economic pessimism, concerns about textile demand. So weighing on the demand outlook for cotton. Trade cotton exports down 400,000 bales this month. That is mainly imports by China and Bangladesh. Also worth noting, the cotton part of the cut in consumption this month also reflects the smaller crop in Pakistan. And we did cut China's, of course, this month as well. Slide in there. U.S. cotton supply and demand. Again, production just plugging in the changes from NASS this morning, in terms of slight increase in production, and didn't make any changes to our mill use or export forecast, so it essentially all drops into ending stocks, higher U.S. ending stocks, with a little bit of change to the unaccounted as well. But we did make a fairly sharp reduction in the season average market price forecast. This is based on, as you know, I mean, prices, notwithstanding last week, prices had been on a downward trajectory. Also got some new price information from NAS, and that is also indicating farm prices lower than we had been anticipating. So again, that you see there we cut the price 5 cents per pound this month, and fairly substantial reduction year over year. Let's move into sugar. Kind of looks like a lot going on here, and indeed there well, sort of is on the sugar balance sheet. On the old crop year, I put that up again. That's the crop year that ends with the fiscal year, September 30th. And basically what we're doing there is just truing up the data based on the final fiscal year SMD data from FSA. Couple noteworthy changes there. Domestic deliveries we cut, so that strong pace of U.S. Domestic deliveries really fell off in September. And we also saw lower direct consumption imports. But anyway, when you add it all up on the back year balance sheet, what it means is we're carrying in a little bit higher beginning stocks into the new crop year. Then in terms of, also just worth noting on the old crop year again, reminding you that with the way the sugar marketing year works, those changes to production for the back year reflect for beets crop that was harvested in September of this year that falls into last year's crop year. So more was harvested in September than we anticipated. So there's a temporal shift going on there. And that's why you see partially a reduction in the new crop year, increase in the old crop year. It just has some of that commodity is shifting from one year to the previous. And then focus back on that new crop year, of course, incorporating new production information as well as that temporal shifting and expectations of lower sugar recovery, especially in beets, tightening up supplies there a bit, especially on the beet side. Mexico, I'm going to talk about Mexico on the next slide, but basically we're seeing tighter supplies in Mexico and reduction in our export forecast to the U.S. High tier sugar imports we raised for the new crop year. That just directly reflects a large raw sugar shipment that entered in November. So direct data there. Domestic deliveries we pulled back a bit based on just the trend that seems to be established in the previous crop year. And it's I'll just point out it's largely a coincidence that we have a 13.5% stocks use ratio. It's December where we actually target the 13.5% ratio to calculate U.S. needs, Mexican imports. But if nothing else changes, then you're basically looking at the December balance sheet today. But something always changes. So in terms of the Mexico balance sheet, again for the back year, just truing up final data from kind of Basuca. For the new crop year, no change in production this month. Pulled back our import forecast a bit just to line up again to the previous crop year. That trend seem to have been established. Domestic use, we saw a pretty hefty increase in domestic deliveries starting last year, again carrying into the new crop year. And as you know, with the Mexico balance sheet, exports are essentially determined residually to allow for 2.5 months of stocks on hand in Mexico. So that's our Mexico export forecast. And it's worth noting there too that in terms of those exports, if this comes to pass, all of those exports come to the U.S., nothing to third countries. So relatively tight supplies in Mexico. Let's wrap things up here with meat and livestock. Few changes here worth noting. Beef production forecast for the current, again, we're shifting into calendar years now, of course. So beef production for the current calendar year increased by 210 million pounds, and that is, again, we're late in the year, but we're really just looking at the observed slaughter pace and relatively abundant cattle supplies for 2022. Now looking forward into 2023, given that many of those cattle have been pulled forward into the current calendar year, we expect supplies to be tightening up next year, and that's where you see the reduction both for this month and fairly sharp reduction year over year as well in beef production. Pork production, again, down a bit this month, just based down 30 million pounds, just based on slaughter pace to date, and forecasting just a month or two here at the end. Broiler production forecast up for both 2022 and 2023, and higher year over year, as we're starting to see the broiler industry responding to price signals, strong prices, increasing production, maybe getting a little bit better handle on some of the hatchability issues that they've been dealing with. So so that's that. Livestock prices, steer prices, we raised $1 for calendar year 2022, just based on strong packer demand. And then for 2023, for next year, 2023, raised them by $2 a hundredweight, in anticipating continued strong demand along with much tighter supplies. So raising those prices. Hog prices raised by 25 cents a hundredweight this month too, again, just based on observed data to date. And similar broilers, we're just looking at observed data. Didn't make any changes for next year for either hogs or broilers. Turkey price forecasts raised for both years, again, consistent with those tightening supplies. Trade, really not much to report here. Again, just throwing up data, no real story. Story hasn't changed much in the last month, so we'll leave it at that. And wrapping things up with dairy, in terms of milk production. Milk production, small change in production for the current calendar year. Negligible change for 2023, and in both cases, we're looking at lower cow numbers offset by higher milk per cow forecasts. In terms of dairy trade, fat basis import forecast reduced a bit this month. That mainly reflects lower imports of cheese and butter for 2022 and carrying into 2023. Exports, on the other hand, fat basis, that's also lower cheese exports as well as lower exports of butter fat containing products. And for 2023, the little upward adjustment in our export forecast on fat basis is higher butter exports. In terms of skim solid basis, not much to talk about in terms of imports. On the export side, 2022 higher exports of lactose, and 2023 adjusted our export forecasts higher for whey and non-fat dry milk. So prices, what we tell you here, mainly again for 2022, we're looking at observed prices and just making necessary adjustments based on what we've seen over the past month or so. Butter prices, as you know, have declined sharply in recent weeks. But stocks remain tight, and we actually adjusted our butter price higher for 2023. But again, reduced it for 2022 based on observed prices. Non-fat dry milk for 2022, we're looking at international market pressure, and that is expected to carry into 2023. And then in terms of milk, milk class prices, lower across the board, as you can see. Class 3 prices driven lower, reflecting lower cheese prices in both years. Class 4 price reductions in 2022 reflect the butter price decline. 2023 mainly driven by lower prices for non-fat dry milk. And then the all milk prices, as you can see, also fall accordingly. And that is all I have in terms of the WASDE. I just remind you and all the guests to not forget to sign up for the Ag Outlook Forum. I should have put up a slide, but registration is open for next February. Registration is on our website. Hope we're back in person. Hope to see everyone there. And with that, anyone watching online, hope I could answer some of your questions, and we look forward to seeing you back here next month.